Mike Roger with Investing News Network here at the Vancouver Resource Investment Conference 2014. And right now I'm with Benjamin Cox from Oren Inc. Oren Inc. is a merchant bank focused on natural resources. Thank you very much for your time.
Thank you for having me.
Since you have a very unusual, perhaps even unique perspective, I thought I would ask you a different question. One of the things we talk about with individual companies is catalysts, things that investors should be watching for, things that might represent a change or an upcoming opportunity. If you were to give us catalysts for the market, what kinds of things come to mind?
The catalysts I would give for the market really come down to two very simple things. First of all, what type of investor are you? Are you a precious metal investor? And the catalyst you really want for the market is this coming zombie apocalypse. You want to see the world come to an end, and you want to see it come to an end with a gracious, glorious overtone. If you're a base metal investor in other commodities, you want to see a fundamental bottoming of the market. You want to see a market where companies have restructured. You want to see a market where companies have fundamentally restructured their balance sheets, their finances, and everything else. And you want to start seeing the salvage, brutal, PE-style investors coming in and taking advantage of the poor companies that are left, at which point companies will be structured for recovery. But they're fundamentally different catalysts for fundamentally different markets. And we fundamentally have two groups of investors sharing one investor pool.
Interesting. So, zombie apocalypse, I can't even say it, is one thing that precious metal people are looking for. What about something milder like inflation?
Well, according to current monetary policy, inflation and the zombies are pretty much the exact same thing. Theoretically, we've gotten to the point where we can fundamentally control currencies to the point where there'll never be inflation ever again, no matter what we do with them. So if you have that level of belief, any inflation at all is pretty much the coming of Armageddon. So that's what they're waiting for. But the problem is we've actually successfully managed to create much more a Japanese-style deflationary environment versus a modern inflationary environment in the last 5 years. And really, there really are only two options that can come out of the current financial crisis, either deflation or inflation. And so far, we've seen deflation. Now, can that be maintained? I don't know. But even if we get inflation, will that necessarily mean a transfer to a gold-based or precious metal-based currency? That I have doubts about. But mind you, I'm known not as a gold bug.
All right. What about Bitcoin?
A Bitcoin is sort of like that Irish betting site that was functioning on the U.S. elections. Great odds, great places to play, wonderful thing, but you're never quite sure it's legal. If one government besides the Chinese decides to shut it down, Bitcoin's going to have a real fundamental structural issue, and I can see real issues for Bitcoin investors. You fundamentally, it's just slightly too weird, slightly too volatile to be a currency. In my mind, if I had to pick the currencies that are going to work, I'd be focusing much more on rhodium, platinum, palladium, copper, fundamental things that people use that will both work for a coming zombie apocalypse or hyperinflation and for an economic recovery where we actually will consume them if they don't get used. My problem with both Bitcoin and gold is fundamentally we don't need all of it we have in the world. So they're both luxury items. They're both not fundamentally consumption items, and that's why I don't think that the catalysts matter as much for them as they do for other things.
Yeah, that makes sense. So you're much more of a consumption investor versus a sentiment investor.
I love seeing things burned up. I think that the good things about wars and about other nasty, horrible events is they consume resources. Resources like gold, where 80% of the gold, or 70% of the gold we've ever seen in the world, we know where it is. When you have 80% of the gold fundamentally in someone's hands, supply and demand are irrelevant. What's relevant is the long-term macro ebb and flows. And I have a much harder time understanding that than copper, where really we can only access a tenth of a percent of the global copper production forever, but most of it's in this building. It's in the camera that's shooting this video. It's in my cell phone. It's all the way around the world, and that's our fundamental limits.
Okay, so you talk about copper, platinum, palladium, but not iron ore.
Look, I love iron ore. Iron ore is probably one of my largest assets, but the problem with iron ore is it's an oligopoly-controlled asset. It's not an asset where the catalyst is fundamentally supply and demand. The catalyst for iron ore on a major perspective is whether or not the majors maintain the monopoly, what happens to the Chinese and the Chinese New Year and how that impacts demand, and what happens with Chinese supply and other issues. It's a fundamentally different sort of market than any of the other markets we look at. It's one of the only markets that actually has a real fundamental, I hate to say it, big brother watching it.
Okay. So if everything is just cyclical, and if it's just a matter of the consumption impacting the market, then do things like regulation or perhaps over-regulation or the existence of the market, the exchange, impacting companies, or is it just...
Well, we're having two very different conversations here. You're talking about commodities or companies, I'm talking about commodities. Commodities are driven by supply and demand. Junior companies are driven by a combination of ability to access capital, supply and demand, and whether or not your grandmother had a good hair day or not. You have fundamentally 3 or 4 different things that are collectively driving company shareholder demand. And the reality we have is we have a burned out shareholder base that has been just destroyed by 2 economic downturns where companies have not fundamentally respected investors' capital. If you stay at the Royal York while taking money from your grandmother to pay for your shares, you're fundamentally not going to get a lot of trust in a return. So what we need to do is we need to regain trust on the investor side. That's going to be the catalyst to get a recovery in this market. A regaining of trust, a restructuring of the companies that need to be restructured, and fundamentally people forgetting how painful the last down cycle was. Once people start tasting some good upside returns, they'll come back in the market with as much strength as they ever did before. I mean, if you ever ask a woman 3 days after they gave birth if they can have another kid, they'll say yes. If you ask them 20 minutes after they give birth or during the process, they'll say, are you crazy? And they'll hit you. So you just have to pick your timing to decide when recovery is going to come.
Okay, so what about demographics then? Is demographics shifting to the point where a large amount of the investors that have been in this market before are becoming too old to be in speculative things?
The best comment I ever heard was from someone who ran a show, not this one in particular, who made a comment that he had a problem that his show attendees were fundamentally dying. They were just dying off. So yes, demographics do matter, but the reality is the real money chases things that make money. So if the market's down 98% and it goes back to 96%, it's going to outperform any other index and money's going to flow in here like a tide. That's what it's going to take. A little bit of an uptick drives more money in, drives a little bit of an uptick, drives a little more money in, drives stupid spending, drives the next crash. It is a weird, horrible, cyclical environment we live in, and it means we're either in feast or famine. And when we're in feast, it's $500 bottles of wine, and when we're in famine, it's bankrupt companies, and there's nothing in between.
That's great. That's all I've got. Thank you very much.
You're welcome.